Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey, welcome back to the Private Lenders Podcast. I'm Jason Balin from Hard Money Bankers, and with me live, Bryce Matheson from Holbrook Capital out of Idaho. Definitely looking forward to this conversation with Bryce. We officially met up at our mastermind group a few weeks ago. That was the first time we technically met in person, but a few months before that, we have been chatting about private lending, how our operation works, how Bryce's operation works, and certainly impressed with the private lending business that he has grown here over the last few years, and looking forward to sharing it with our audience. Bryce, welcome to the show. Thanks so much.
Hey, thanks for having me. Hopefully I can impart some wisdom with the guests. We'll see how we do.
Oh, I'm sure you can. Why don't we just start maybe from the beginning? Like, how did you even get into private lending? Like, what made you so interested in this business model?
Yeah, great question. So I think the progression is pretty common among most of the lenders that I speak to and the friends that I have in the space. But we got started in real estate back in like 2016 or so, and it was mostly just kind of out of desperation. We needed some extra income, and so we everybody heard that rentals is the gravy train, and that's the end all be all. So we did that. After a couple of years, we kind of got tired of being landlords and doing that whole thing, and so we moved into the flipping side of things. And in the last 5 or 6 years, we did around 100 homes. And we really enjoyed that for a while. Like, I enjoyed the construction side of it, but my wife would get really into all the design and the accent walls and all the, the cutesy decor and stuff like that. So, it worked out really well. And then, kind of the catalyst that pushed us into the private lending space was, it was about a year after COVID. We had a project that just did horribly. I mean, just about everything that could have gone wrong did go wrong. And so we basically broke even. I think at the end we walked away with maybe $1,200 on that flip. But I remember looking at the settlement statement when we were all done, and our hard money lender at the time, he made like 25 grand, and he didn't have all the sleepless nights. I don't think he even knew what was going on. And so that was kind of like the light bulb moment where we're like, all right, we should look more seriously into this. And that's what kind of jump started the rest of the journey.
Yeah, we had the exact same experience, actually, when the hard money lender made more money than we made after all of our hard work and 9 months of grit. It happened, a little bit before years before that. But yeah, like that's exactly when it was like, the guy who we lent money from at the time, or borrowed money from at the time, his name was Ray. So like I always like, just it reminds me to think of Ray's story. Like, hey, like if Ray had no idea that we lost that, I don't even know. I don't remember if we lost money or made a little bit, but it was whatever it was, it wasn't like a big implosion. It was just like, man, this was a lot of work for nothing. And Ray still made his $50,000 on points, fees, interest, everything else. What was your biggest challenge? Kind of, we can back up to, you said around COVID time, so March, early mid 2020. What was your biggest challenge
in like the lending space or the flipping space?
No, the lending space. Yeah. Like when you started out, you made that mental mind shift. Like this is what you wanted to do. Like what were some of the challenges that you had?
Yeah. The biggest things initially were just mainly actually I take that back. I don't know that we had like a bunch of big roadblocks. Like it started small, like we had a couple $100,000 that was sitting on the side that we weren't currently using in a project. And so our first real, private loan was just to a buddy of ours who was in the flipping space. And he was like, hey, do you want to fund this one for me? And I was like, oh, okay. Well, yeah, we're not doing anything with this right now. Eventually we'll probably have another project. But we did that loan. It was quick, easy. I think he was in and out in 3 or 4 months. And, we probably made $8,000-9,000 on that deal. And that was kind of like, oh, wow, this is slick. I'm definitely a big fan of this. So, there's been different like problems as we've grown, and we talked about this at the mastermind. It's kind of a seesaw. You have too much capital and then not enough capital, and too many deals and then not enough deals. And so we're still trying to balance that out and kind of figure that out. But all things considered, considering our background and the flipping and everything like that, like it's been a fairly smooth transition.
Yeah. And that seesaw thing, that's a kind of forever thing. I've people ask me questions and be like, well, when does this stop? And it's just like, it doesn't really stop. Does it get easier? Yes, because there's more consistency in the business, but like it takes some time for it to stop. I mean, we're even inside our business where like, it's interesting because we've been well capitalized for a long period of time, and like being well capitalized and then people trying to put more and more money into deals, like, and we don't have it. Like we don't have more and more deals, right? But then all of a sudden, like, let's say we had this absolute banger month, right? And there's like several really large loans that have to close. It'd be like, oh shit, like I know the money is there, but like it's not just sitting there. Like, hey, we might have to like go figure out get some sideline capital to do so. So
right.
Those things that I think a lot of private lenders, and you probably have had some uncomfortable situations as well where it's like, oh shit, like I've got a big pipeline coming up. Like I need to figure out where some of this capital is going to come from and vice versa. And you could probably attest to that, like knowing that like, hey, if I want to be successful in this business, like I got to be out there finding deals every day, and I got to be out there finding capital every day.
Yes, absolutely.
I'm going to be in trouble. Right.
Right. Well, and it's been kind of fun because like, at least for me, it's a testament to like, oh wow, I can do hard things. For like, one month we had too many deals, so we had to go find capital. Cool. We went out and we found it. We raised $1 million bucks in capital, and so that was cool when you've got all these deals that are closing. And you're like, I don't know where this money is going to come from, but you figure it out. And so vice versa. I think there's definitely I think in any business, there's ebbs and flows, right? And so there's times when we really shouldn't take our foot off the gas, or we need to kind of pump the brakes or add more fuel to the fire, whatever it may be. And again, that goes with the seesaw thing, but I'm still trying to kind of figure that out. But it's been very, very interesting to say the least.
Do you have any like recommendations for private lenders or hard money lenders that are looking for, more deal flow, like something that you think you're doing that's unique, that's helping drive borrowers in the door?
Yeah, I think, and again, this was kind of part of my presentation at the masterminds, but one thing that has been doing really well for us is social media, particularly like with Instagram and YouTube. I've tested a lot of different platforms: Twitter, X, Facebook, TikTok, all the above. And the highest conversion rate that I found is on Instagram and YouTube. All the other platforms kind of pale in comparison. I think for a while, TikTok was really big because people could, post 3 videos and all of a sudden you get hundreds of thousands of views. But the views don't matter if you don't get any conversions on the back end. And so like I said, for Instagram and YouTube in particular, those have done really well for us. And we've kind of got a fairly simple content system down that's allowed us to have a fairly steady flow of deals that have come in regularly.
Yeah, that's good. Now, do you follow that same model for raising capital too, or more like on just?
Yeah, it's very interesting because I basically what I'll do is I'll just switch out the link in my Instagram bio depending on whatever we need. So if we're short on capital, hey, we're looking for capital. If we're short on our pipeline, hey, we're lenders and we can help you there too. So it's really nice because I can just flip of a switch. I can just kind of change the way that I am building my content, even though it's all within the same niche as a whole.
Yeah, that's great. And then you're just known as, hey, the hard money guy, or the private lending guy. And yeah, I like that. I think that's unique compared to, I think, a lot of the older, maybe more traditional ways that folks are raising capital and finding deals. I think that's good. And there's
all that to say too. One thing that I definitely picked up from the mastermind a couple of weeks ago was I really need to be doing better at email. That was something that you guys really hit hard on. And like, I really don't have a good email system. So that's kind of a secondary focus that I'd like to ramp up.
Yeah. And it's a way, I mean, here, a lot of stuff, and a lot of the stuff that we do in social and your social, I mean, is phenomenal. I thought some of the stuff that the creativeness that you did, and, definitely, at the end, Bryce will share some of his social channels with everybody so you can find him, but there were some really interesting and unique ways to do that. But then the goal is figuring out a way, well, okay, that's great. I can get views, like how do I convert them down the road, or how do I collect their email addresses? And, I think that is where a lot of lenders in general are, lack, because I mean, think about like, an offline brick and mortar store, and you you have the sale, right? And you're just driving, you're spending a lot of time, resources to drive people in your front door, and then they don't buy from you, and then they just leave. It's like, that's just a freaking waste of time. Like, you did all the hard work, hard work's over. You just need to figure out how to capture their information. And what I've learned in this business, and you could probably attest to this as well, is somebody that's calling you today, like, it's great if they have a project that we can fund and close next week. But a lot of the times it's just early stages, looking for information, need a pre-approval letter. Maybe, they don't need your services at this time, but they will in the future. They're still a real estate investor, quote unquote. So if there's an automated way that you can stay in front of them, AKA email database on a regular basis, when that time comes, they'll be there. So yeah. And I think that front door makes a lot of sense. And I mean, honestly, I wish some of our social media videos that we're doing were as unique as some of yours, because you're getting a ton of viewership on that. And again, you're capturing a lot of people right there because they're coming, they're ready, they're coming, they're clicking on that link. And it's just kind of getting creative to figure out a way, like, how can I capture more people?
Right.
So
and the other thing that's interesting too is, like, they're very much lagging indicators, right? So for a while there, we were very short on capital. So everything we were doing was about raising capital. And then all of a sudden we had too much capital and we kind of took our foot off the gas. And then all of a sudden now I have all these requests for capital, and I'm like, I can't help you right now. I'll let you know when something changes. But naively, I was hoping that that wouldn't be the case with our pipeline too. I was thinking, okay, I need some deals that it's going to close in the next week or two, and I don't have anything. And so we're kind of starting to ramp up that pipeline side. And then I know those are going to be lagging indicators, and 3, 4, 5, 6 months down the road from now, those are going to come in. But it's just, again, that seesaw, and it's a major pain in the ass.
Yeah. It's like one thing that a lot of people don't realize in this business is that seesaw effect, that, like, you just don't realize it, but, like, it's a real thing. And we all, I know we kept going back to that, but, like, it's a real thing, and we suffered for it, and from a long time. And it's, so most of the stuff, tell us about kind of your geographic area. Is it the whole state of Idaho, or is it certain cities, or, are you expanded beyond that?
Yeah, we're particularly like the whole state of Idaho. Originally, when we were, lesser well capitalized, it was just like our very local area. We're Idaho Falls. We're about population 80,000, so relatively small compared to probably a lot of the listeners out there. So we've since branched out to Boise, because that's a significant area in Idaho. Eventually, we may branch out elsewhere, but I really do feel like it's pretty difficult to capture the whole entire state. There's so many different lenders out there. Like, we haven't even scratched the surface on the different borrowers that we can cater to. We do have a couple, like, random one-off projects in other states, Alabama, Oklahoma, and a lot of people will say that's a very strange cluster of states. Why those three? And really what happened is we just had some really good borrowers who moved out of state, and then they're like, hey, can you fund this deal here? And we said, sure, that's great. So not that we won't do deals elsewhere, but I just know, this area is so much better. So we try to stay local if we can.
Well, also, if you're in not everybody's, this isn't for everybody, obviously, but if you're in an area that's big enough for growth, you're at a price point that makes sense. The median housing price is at a good price, and there's enough activity. It's perfect. I think a lot of people, I think there's two types of people. Some people expand because they think that, I can't get deals here locally, I'm just going to go expand. And then, hey, why not be in 50 states instead of one state? And then they focus on the wrong stuff because they're all scattered instead of staying focused. Right. And some do truly reach capacity where they, like, need to get more volume somewhere, and they leverage to do out of states. And, there's some lenders that we know that their average loan amounts are very small. And, like, let's be honest, if you do a $500,000 loan or you do a $100,000 loan, it's kind of about the same amount of work. And there's an argument that, and there could be an argument that the bigger loan amount stuff, I'm not talking about jumbo stuff, but, like, $300,000, $400,000, $500,000 loan amounts might even be safer. There's an argument behind that as well. So, I agree. Like, if there's enough volume, driving distance from you in areas that and are comfortable with, I mean, I can tell you, and you've kind of may have learned since you've dabbled in some of these markets as well, like, stuff's different. Like, it's not just laws and median housing prices. It's also people, and communication. Like, listen, if if somebody's listening or watching, and you want to look on a map, or where, like, the Mid-Atlantic is, like Maryland, Washington, D.C., Pennsylvania, New Jersey, Delaware, Virginia, and stuff like that. like within a 2-hour drive, you're dealing with very, very, very different types of people. And you got to adapt by that. People communicate differently. Like when we're talking to defaulted borrowers or newer borrowers, just little things, obviously the further north you go up, people are very, very direct, and it might seem like they're yelling at you and telling you what to do. And then you got some people in the South that are like super nice and passive. So you're like, oh, well, this is super nice and passive. I can control the situation. But they might still be ruthless. And then on the front end, you got somebody screaming at you because that's just the way that they're used to talking. So it's not just, it's not just how terms are different, moving to other markets, just communication's different. Things different.
Well, and I was naive too. I thought that like you would be, okay, well, I just need to figure out which states are deed states and which states are mortgage states. And then, I was talking to a lender in Massachusetts yesterday, and he was like, oh, we don't use title companies. I'm like, what are you talking about? So it's just every area is so unique in addition to just like the cultural and the communication.
Yeah, no, I agree with you. And then also, is it, depending on what type of foreclosure, if it's judicial or non-judicial. So like, I'll give you an example. In New Jersey, this is a good example that I think a lot of maybe newer private lenders or hard money lenders that are kind of dabbling into what areas to lend in. In New Jersey, it's a judicial foreclosure. It takes forever. And if we get to foreclosure sale, and we're usually not in a great spot because number one, it takes a long period of time. Number two, it's kind of confusing, but in essence, like we're filing a judgment, foreclosing on the judgment, in essence is foreclosing on the property. Like that's just how the process works. And by doing that, they're using a max payoff amount of when we filed, not an accumulative based on what the actual payoff is of today. So like, for instance, if that happens, our value or our payoff, not necessarily principal value, but our total payoff is usually about 10% higher by that means. Are we getting all our principal back? Are we getting some interest, attorney fees? Yeah, we are, but we're not getting everything, full default interest, late fees and things like that in that particular state. State of Virginia, 45-day process, super easy. Some other states we lend in, they limit the amount of attorney fees that we're allowed to charge, right? If you, if you've been in this business long enough and you know it, and you foreclose on a property, it's like a real foreclosure. You foreclose on a property, they file bankruptcy, you have to fight against that bankruptcy. Long story short, it could take a long period of time. It could be $20,000 in fees.
Right.
So some states that we're in cap us at $1,500 in legal fees. It's like $1,500 or $2,500 in legal fees. So like those are all things that aren't deal breakers, but like they're business decisions that you kind of need to know.
Yeah.
That doesn't necessarily mean that you can't learn them as you go along, but everyone's like, oh, I'll just do something here. I'll do something here. I'll do something here. And it's like you should do a little bit more due diligence. And let's not forget about licensing. Some states do have licenses.
Right.
So needless to say that it's good to hear that your primary focus is local stuff.
Yeah. I don't even want to deal with that because I don't even know if like we have yet to have a foreclosure. I know it's a when, not an if, but like, I don't want to have that. Like I've got my own attorneys here. I've got everything right here in my backyard. I would rather have that first one happen in an area that I'm familiar rather than New Jersey or wherever it might be that I don't know.
And then most of these that you're doing, fix and flip, any commercial stuff?
We've done just a small handful of commercial stuff, like some storage units and things like that, but it's pretty few and far between. I'd say right now about 70% of our portfolio is fix and flip, and then we've got kind of like some small multifamily. We've got a couple of pieces of land, a couple of manufactured homes, actually, like kind of, again, very, very rare, few and in between, but yeah, I'd say our bread and butter is for sure.
Yeah, but local one-off projects that because you're in that area, right? Like right. You can identify that and determine that, and that's hard to do unless that. And like, what are typical kind of terms in your area that you charge?
Yeah, so we're 3 and 14. We're definitely a little bit higher than most. I think 2 and 14 is pretty average in the area. 2 and 12, but I'm okay with that. We have a 6-month term. We'll also charge a 1 point extension for every 3 months up to a max of a year. Typically around 75% LTV, working on getting that hopefully a little bit lower in the future, but we're comfortable with that for now. And I'm okay being on the more expensive side. I would rather, this again was kind of something that I picked up from you guys, but I would rather do fewer deals at a higher price, at a higher rate, than just be like a loan center. Like I don't want to just be this massive operation that I just churn through loans and try to do volume to make the points. Like it's too much work for not enough gain.
I agree. That comes with the level of maturity that I think it takes time for people to know. And it's like, it's about the economics, the bottom line net revenue. That's the only number that matters. And if you can accomplish that with 2 deals a month instead of 10 deals a month,
great.
Hey, you're gonna be living a good life that way.
Absolutely.
Talk a little bit about your lending software. I don't know if you were expecting to talk about that kind of on this, but like I was pretty impressed with the way that you built that out and even how you built that out and managed it. But in this space in general, there's not a ton of tech. And there wasn't a ton of tech. There was like no tech 10 years ago.
Right.
and there's been a lot more resources, mostly since institutional capital came in this space. And there's been a lot more volume in a growing real estate market, that there's been more technology providers that have come in. And, that's a good thing. That's a good thing for industry to have other options. It's not just like, okay, well, this is what you have and you can use this. And Chris and I have used lots of different types of tech, and we've molded kind of what works best inside our operation and not. But what's the name of the software company that you developed? And maybe just tell a little bit about what it actually does.
Sure. Yeah. So it's called Lender. You can go to joinlender.com. And it, a lot of people are familiar with, TMO or Mortgage Automator or whatever in the space. Like it's very, comparable to that. Just a little bit of background. So my like professional career, I went to school for IT. So, this is actually my 3rd software project. We've had 2 successful other software company exits. And just kind of the way my brain works is anytime something is a manual, tedious task, I'm just like, there's got to be another better way to do this. And so when I started my own lending company, the thing that I hated the most was the document generation. Just drove me crazy, and like, there's definitely something to say for using an attorney and they handle it all for you. But in the beginning, I was just, manually copying and pasting and renaming things in the Word file and then sending it to title. And, it would take 45 minutes. And I'm just like, God, there's got to be a way that I can push a button and do this. So I built a little system to do that for me. And then as I progressed more, I'm like, well, I wonder if like I could build a little thing to do this. And then it kind of just like morphed into this massive thing. And now, for example, like things that I really like that it does is all this stupid, tedious stuff, like tracking insurance expiration dates or like when a driver's license is going to expire. So right now we have borrowers that go into their borrower portal, they upload their driver's license, and then we use AI to actually read their driver's license, and it grabs their expiration date and it just dumps it into the system without you having to do anything. And then you get alerts when their driver's license is going to expire. And then the borrowers get that too. They have to go and update it. Same thing with insurance, same thing with title commitments, all these just manual things that you have to do. If I can strip those out and stick it where it needs to go, I can save. Maybe I don't need an administrative assistant. Maybe I can run a little bit more lean because it just does all that stuff for me. So
how long did it take you to build this software? And I guess it's ongoing, but
it is. Yeah. About 3 years and counting now. We officially launched in June of this year. So we're very new, but yeah, about 3 years for the initial concept, basically when we started into lending.
And was the goal originally just to build this for you?
Originally, yeah. And then it kind of morphed into this massive other thing. Yeah.
How much do you spend time on it weekly still? Like, are you constantly like, hey,
absolutely.
I need this, right?
I would say I'm probably 90% software, 10% lending right now. It's like, it's really? Very involved. Yeah. Very, very involved.
And the goal is to just, sign up new private lenders that,
absolutely.
They utilize it.
Yeah.
What is there anything like superpower that you think it offers? And I don't know how much you know about other softwares, obviously, but like, is there one kind of superpower thing where it's like, hey, like this is something that you need because like it'll save your life?
Yeah. So similar to just kind of some of the stuff that I said already, like a lot of the automations and like AI integrations that we have, I feel like is a little bit more cutting edge than some of the other software tools that I've seen. But to be totally frank, like there are a lot of software tools out there that basically all do the same thing. They help you handle the origination, the servicing, and all that kind of stuff. One thing that I didn't like when I was looking at other tools was all the different like modules. It seems like, you have to have this module or that module, or like your piece can do this, but if you want to do this, you have to do that. I didn't really like that. It's kind of like we have a couple of different tiers, but you don't really miss out on a ton of features. For example, like there's basically like a small, medium, and a large. Like if you're just a one-off guy doing lending, we've got a plan for that. If you've got like a couple assistants in your office that need access to the software, we've got a plan for that. And if you're a massive operation and you need some like fund tools and things like that, we've got a piece for that. But I try not to like restrict or remove a ton of features that people would need, just because it's a pain in the ass, and I don't want to be like that. So
yeah, I'm looking at your website right now. $695 for, in essence, $695 for, smaller, $995 for grow, and $1995 for scale, which makes sense. I mean, I think that's in the industry, about the same. And I mean, keep in mind, a lot of these softwares were freaking server based until even recently. I mean, we were server. We had a stupid server, and I mean, I'm not that old that like I didn't even, I shouldn't be working off server based shit. And we had a freaking server, and because I didn't even, I'm young enough that wasn't what I was used to. Like I needed somebody to even help me hook it up, like set it up and monitor it, because I was like, can I just go on this website and do it this way? Like I have to buy a stupid server. I mean, we don't have that anymore. It's web based, but I do think a lot of people adapt to their softwares in this space, not the other way around. Not like, cool, this is the way I want to do it, and then I'm going to tell my software how to do it. I think a lot of them was like, this is how the software does, and you need to adapt. And like, I think typically that's probably not a good thing, but then sometimes it's like, the funny part about this space is you talk to 30 lenders or 50 lenders, and everyone does things a little bit differently because there's no playbook and there's no right or wrong, and you kind of just do things the way that your head may, like for instance, I remember I was talking to a lender that we were working with at one point, and I was like, wait a second. So every loan you do, the payment is 30 days from the closing date. So in essence, if you have a big enough portfolio, you have loans due every single day of the year, or every single day of the week or month. And he was like,
multiple times throughout the month. What a pain.
So like we're recording this on November 19th, and his first payment would be due December 19th. That was just the way that his brain thought. And I'm like, well, what happens if you just change everything and everything was due the first of the month, like the following month? And also, not everyone comes from the mortgage industry. So like, it's like a car loan is typically like 30 days. A mortgage loan is typically paid in arrears. So so related to collections and payments, like it depends on what your background is, right?
For sure.
Like, it's second nature. If I'm going to close a loan today, I'm going to collect 11 days of per diem interest. I'm going to skip the month of December. My first payment's going to be due January 1st, which is going to cover December 1st to December 31st interest.
Yep.
That's what my brain works like, but I certainly understand that other people's don't. So, and I'm like, and like some of them, if you're not in this space long enough and you don't see things through, it's like, hey, listen, all I got to do is like once a month is pull a batch of ACH payments, and every single loan in my portfolio is paid for. Or I send out payment coupons once a month, and people all start sending in checks, right? So that makes sense. But like some people just don't, like, this isn't a fault of anybody's. You just don't know. That's just what so.
And I will say that's probably been the biggest struggle with building the tool, is because everybody wants something very different. It's like, oh, we collect our payment or our points at title. Oh, just kidding. We wrap it into the loan amount, and then we calculate interest on that. And then do you collect Dutch interest or non-Dutch interest? And are the draws at a different interest rate than not? So like we try to cater to everyone, but that has been the biggest struggle, is everyone just has a slightly different structure. And to your point, I think there's definitely some like, well, maybe we should try to change your business just slightly so it's more uniform with the industry, or 80% of the lenders that we talk to do it this way and they like that. But there's always going to be that component of, we have to, cater to everybody.
Yeah. I mean, I certainly got to applaud you, because it's definitely a hard piece of software to build out, right? It just is. And I remember, we looked into doing stuff like this early on, and we're like, man, we're not in the software business. I mean, we tried, I spent whatever, probably like early on in HMB days, we spent about $100,000 to build out like a CRM for real estate investors, to give them as like a free or low cost tool to help real estate investors grow. And like that eventually got scrapped. I mean, a lot of stuff just gets scrapped because it's tough, but being your background, that obviously makes it a lot easier. And, I definitely know some lenders in our local space that are like, hey, we're going to build this proprietary software out. And I'm like, kind of like, good luck. I'm just going to focus on loans. But
for sure,
at the same time, if you're building it out for you particularly, and it's going to save you like the time you've been putting into this, in essence, backs could back out. Let's just say, I don't know for sure, but like could back out just based on the time it saves you on trying to find other softwares, using other softwares. Maybe those softwares don't have a tool that you need that would work great for your business,
right.
and you map it around yourself. And
I will say too, like there's a lot of people who software is sexy. It's like, okay, you build it once, you sell it 1 million times, but it's only sexy if you don't know what you're doing. Because I have a lender in my area who he tried to do something very similar. He was building a commercial loan tool. He hired a team overseas and quite literally spent $800,000 building out this tool, and then ultimately did just what you guys said and scrapped it because it was so complex and just so, it just balloons into this massive project. And if you don't know what you're doing, and if you don't understand software and the way the pieces talk and the underlying infrastructure, it just is very difficult to do.
Yeah, I can see that. And I think that was the issue that we had. And, I was getting to the point that I was, managing outsourced developers, and then I would get their code. And then I had a pretty high-end developer and coder that, has a lot of experience, but he was US based and significantly more expensive. And then I'd have him try to freaking map it together, which made it more like I've tried a lot of different things, because it wasn't just like, this is a sophisticated software. And Chris and I can attest how sophisticated a servicing software is, because I'm inside the software all day long, and I know what it does. And I know, and it's just like, well, what about this, this, and this? And like, I've got people that have developed like smaller scale versions, and I'm like, yeah, that's not what this does. Like, this does everything. And there's just so many ifs and that's and this and that's. And so it's obviously, commended. And I've done little kind of one-off things, and those are even a freaking pain in the neck. So I'm gonna leave the software development to the experts.
No, and you're good too, because I think one thing that I have, and I know it doesn't sound like it, but one thing that I have really tried to do is like slim down my focus, because as entrepreneurs, like it's always like, ooh, shiny, we've got these new ideas that we want to chase, and this would be really cool, and that would be really cool. But I have realized like I would rather go very narrow and incredibly deep than the opposite. And so yes, the software is still a different vertical kind of, but it's all within the private lending space. And so that's my goal for the next 10 years is grow the private lending and grow the software. And that's I am not taking on any other projects or any other things during that time.
Yeah. And the beauty of growing a private lending business, which I think 90% of people don't understand or miss the boat on, is this is an investment vehicle and a family legacy type of business. This isn't like, hey, I'm buying a lot of wholesale deals and flipping a bunch of properties and I can make a lot of cash flow windfalls and some money right now. This is like, nobody out there has investment vehicle that can produce 10, 15, 20+% returns over and over and over continually. And you go run a business model like this by Warren Buffett, he'll be super impressed. And I used to have and I wish I still had this right over my computer. We had a flood in this office like 4 years ago and it got ripped down. But in essence, it was like, find me an investment vehicle that can spit out, a double-digit interest rate return in any market, any economy, whenever, and I'm all in on it type of thing. And that's what private lending is the right way. The reason we're so anti-institutional capital and stuff like that is that's just, a mortgage product. Like back in the mortgage industry, you're just slanging deals. Like it's just deal junkiness. It's, hey, you have this vehicle and you're finding deals and you have the same real estate investors and borrowers coming to you over and over and over. Plus you're putting your capital, your family capital, your friends, whoever else's capital to work at a high interest rate of return. And, it spits out a big number. And in essence, if you're doing this right with compound interest, you should be doubling your personal capital, every 3, 4, 5 years on this, and just keep pushing it in on that. And it's a well-oiled run machine. And, if you're into legacy stuff and, your kids want to be involved in this business, like really want to be involved in this business, and you want to give them training for it, hey, I'm going to teach you how to go find deals. I'm going to teach you to go find deals. And we already have a vehicle that is in essence going to provide you an income if you just find deals over and over and over and over. And then as you earn your own personal capital, you can invest in this vehicle. So you can make money on the front end and you can make money on the back end. And we learned that early on, but I think, and I think everyone, including yourself and in like the inner circle group, they get that. They're not just trying to slang deals and move out of the way.
For sure.
But a lot of private hard money companies, I don't think fully get that. And
right.
They've got this gigantic operation and they're doing $100 million a year. And it's like, yeah, but like, is your money in the business working?
Right.
But my motivation, and listen, we have great relationships with all our capital investors, and hopefully they'll continue to stay in forever if we continue to grow. But like, our motivation was like putting as much of our own personal capital into this machine, in this vehicle, because it grows pretty darn fast and tremendously.
So fast.
So it's so it's good to share that with other investors and lenders that understand that, because just so many people don't.
Yeah. And truly, like you said, like, where else can you get 20% annualized? Anywhere else?
Yeah.
That's not a gamble, or you're buying some crypto, whatever. Like, it's just not realistic. But like, and then too, like, the number one thing in real estate that, is OPM, other people's money. So if you can build this machine, put your own capital in it, and then scale using other people's capital, like, sky's the limit. You can run it however you want.
Yeah, exactly. And you can do this with other people's money, forever, or especially early on. I mean, when we started in our 20s, like, we didn't have any of our own personal capital. And I mean, we had millions and millions and millions and millions of dollars on the street before we even started putting our own capital in it, because, we started putting capital in early on, but like, it takes time to accumulate that.
Yeah.
Right. And it makes a lot of sense. So needless to say, this is a great business model and an industry. Bryce, I certainly appreciate you hopping on here with us, for the last 30 minutes or so. What's the best way that, other private lenders, experienced lenders, or aspiring lenders can find you?
Sure. So probably easiest, just because, like I said, I'm pretty active on Instagram. So it's just at Bryce Matheson. You can find me there with all my corny, cheesy videos. You can also feel free to shoot me an email, Bryce at Holbrook Capital, HOLBROOK, holbrookcapital.com. And then you can also email me, Bryce at joinlender.com. Lender is LENDR.com. Anyway, all the above. I'm pretty active on social, email, phone, all the above. So shoot me a DM, and happy to help any way I can.
Yeah. Excellent. And the loan management software company is joinlender, LENDR.com. So that's a good one. And I'm on that website now. And honestly, I didn't even know about this until, 2-3 weeks ago. And it definitely seems like an awesome software. So
I appreciate that.
If you're watching, listening, viewing, thanks again for all your support. Couldn't do it without all our loyal followers. Definitely reach out to Bryce, check out his social media stuff. For nothing, just to, laugh at some of the videos, because he's definitely got a good feed, and I've learned a lot from them as well. And, we're working on figuring out ways to be a little bit more creative in that means as well. So thanks again, Bryce. Certainly appreciate you coming on.
You bet.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.